So this is the first tool of financial analysis, the horizontal analysis, also called trend analysis. I'm showing it here on the income statement, but it can also be done on the balance sheet or the retained earnings statement. And when we're looking at the raw numbers for the 2 years, we really can't tell a whole lot about how the company's doing. And so when we put it in terms of percentages, it makes it a lot more analyzable. So there's a couple of ways to do the horizontal analysis. The first is you take the current year minus the base year, and the base year is the earliest year, and everything is done in terms of the base year. So if you had if you had 5 years going out here, the earliest year would be the base year for all of those years. So you could go, year 2 to year 1, year 3 to year 1, and so forth. But this would be the earliest year is the base year. So you can take the current year minus the base year divided by the base year. And that's really just what it gets you here is, if we go current year minus the base year, that gives us the change, okay? So that would be the current minus the base. So current is 20, base was 14, so that's a $6,000 change. And then you simply, to get the percent change, you divide the 6,000 change by the base year of 14, and that gives you a 43% change. 0.43, also expressed as 43%. Okay, so you do that the same with the same process for do your operating expenses. So the current year minus the base year would be 5,000 change, and then you take that change, divide it by the base year, which is 10,000, and that gives you, 50%. I'm doing it both ways here, so you can just see the two different ways to do it. And then you do the same thing with your net income. The change is 1,000. Do the change divided by the base year amount, and that gives you your percent change, or 25%. Okay. We'll get to seeing kind of what's the meaning of all this. I'm really just doing the mechanics in this section, and then when we do the exercises, we'll analyze it a little bit more. This is just the mechanics. Okay, so the other way to do it, so this is the way one, and the second way to do it is you could simply take the current year, current year minus the base, the current year divided by the base year. So if we were doing that with these numbers, we would take the 20,000. So I'm doing the 20,000 for service revenue divided by the base year, which would be 14,000. And when we do that, we would find that we had a 1.43 increase, or it would have increased 143%. Okay? You notice that you can express it in terms of the change. It was a 43% change, or this year is 143% of the base year. You do the same thing for your operating expenses. It would be the current year is 15 divided by the base year is 10. Okay, so that equals 1.5, or it's increased 150% over the base year. And so you can see how that would work for the net income as well. It's all a matter of what makes the most sense to you. This is what you will see the most. They'll do the current year minus the base year, get the percent change, and that tends to be a little bit easier to understand for most people, but you will also see it expressed the second way as well. So you just need to be familiar with both. So that's your horizontal analysis, the mechanics.